Everyone, let's stay on the markets for a hot second. Stocks are close to the flat line. They're close there. Here on the day, you're seeing some light moves. The S&P 500 has pulled back after topping 5,500 in intraday trading Thursday. And Nvidia is falling for a second day, off about 2% after losing $118 billion in value on Thursday. Wall Street also watching out for the triple witching, which our own Julie Hyman just broke down. Here to help us navigate the market, we have Katy Kaminski, AlphaSimplex Chief Research Strategist and Portfolio Manager. Katy, it's great to see you and great to dive into some of this week's themes. I mean, we laid out a lot of them, but first, perhaps let's just begin on this equity market march that we've seen over the course of the month of June and whether that's set to continue here.
Yes, I mean, it's been a very interesting month because even though stock markets are up this month, you've seen very different views in the other asset classes. So you saw a lot of sell-offs in some of the risk assets like commodities, and you also saw bond yields falling a lot this month. So the one thing that has sort of held its ground is the equity markets. And I think in some sense, there's a little bit of nervousness about valuations, where we are, and sort of some of the recent economic data. So it is quite impressive where we are given some of the data that we've seen this month.
And so that considered, it seems like the market is really, and as you were kind of putting the inflationary picture up against the market performance, it seems like this is a market that is really going to continue to look for any areas of disinflation ahead of deflation.
Exactly. And what's been interesting and a little bit nerve-wracking to me this month is that the first part of this year, we've consistently seen positive stock bond correlation. We've also seen the market looking for disinflation, looking for positive news in economic data that is weak, but not too weak. This month, on the other hand, we started to see a couple of instances of risk-off behavior where we started to see investors getting a little nervous about some of the weaker economic data. So you saw more of a risk-off type of pattern where investors have started to move into long bond positions. So you've seen yields going down this month. And this is a little bit of a deviation from what we saw earlier this year. So it is a little bit of a sense that the market is pricing in a harder landing probability that's higher than it was before. So I think there are definitely nerves about just the extension and the bifurcation in the equity markets, despite the fact that we are sort of on the right trajectory towards rate cuts and disinflation.
How is this showing up in the bond market?
Yes, good question. We've seen a massive pivot in signals on the technical side for fixed income. You're seeing short signals in fixed income starting to tilt towards long, and you've seen a massive move in yields this month, which is indicative of the market sort of pivoting in some sense towards a more of a risk-off feature. So less focus on inflation, maybe a little bit focus on nerves about the potential for some downside. Considering how far we've gone and how few really negative days we've had this year in equities, it's not surprising that some negative data is making people a little bit nervous.
And so with all this in mind, I mean, the Fed is going to continue to look towards future CPI prints. I mean, it's interesting, especially coming off of the movements that we've seen recently and where inflation still is and isn't. I mean, it's still showing up in some of the services. I mean, shelter, that component continues to really kind of just push CPI in every reading that we've gotten to this point. But how is this all impacting in terms of the inflationary picture, impacting the dollar as well?
This is a very good question. The dollar has been very mixed this month, but there's a couple of things that are holding the dollar up. So one is the fact that, you're kind of seeing the Fed being a little more cautious. You're also seeing that, if you think about trading the dollar versus another currency, what's your alternative? If you look at the alternatives, a lot of other central banks have already started cutting rates. This puts the dollar in a more favorable position. But despite that, you're also seeing a little bit weaker data on the dollar, which would make it weaker. So net over net, the dollar is still looking relatively strong this month, despite some of the weaker economic data. I think it's because people need an alternative. You have to think if you're going to trade against the dollar, you got to pick another currency. And other currencies have struggled some, and they're also much earlier in their hiking cycle, which puts them at a disadvantage over the dollar in carry terms. And that suggests that the dollar is still relatively stable.
Okay, and so here on this witching day, I want to leave investors with some tips here, Katy, as they're really evaluating all the different elements of the trade that come together that we were just discussing here in this conversation. What are some actionable tips that investors can deploy, considering the macro backdrop and considering the run-up that we've seen also in equities?
I think it's important for people to be cautious and not too myopic in this situation, particularly in fixed income. So when you're thinking about how should you position yourself, you probably want to think about locking in some yield, but also being aware that you might need some other tools in your toolkit, whether it's long short strategies that have exposure to commodities or other things that might be more amenable to an inflationary environment. So like you pointed out, inflation is not down to 2 yet, which means there's still going to be a lot of movement in other asset classes. And you're also going to see stock bond correlation continue to be positive, which suggests that you need to think about trying to find other asset classes and areas of diversification so that you're not too overexposed to stocks and bonds when they tend to be positively correlated.
Katy Kaminski, AlphaSimplex Chief Research Strategist and Portfolio Manager. Thanks so much for taking the time here with us. Appreciate it.